What up? What up? Zach Bradshaw. Guess I'm back with another Trading Journal, something like that. Um, but another couple of things happened. I just want to document some of this for my little brother, but also for me personally. Um, so last night I put in a stop loss, which I tend not to do. I like to do these. I like to get in and out of my positions with market orders while I'm watching the chart. I really don't like to put in stop losses because Bitcoin has so many stop hunts where the market makers just force the thing down so that you get out, they take your money, and then they let it go the way that you thought it was going anyway. So I don't like to leave my orders on the market like that because the market makers can see that all these people have stops at certain levels. So I made an exception last night because we've had this nice run up, and when it breaks down, it's going to break down violently, and I don't know how violently that's going to be. Could go all the way down to like 16,000 and still be on like an uptrend. Um, I don't think that's going to happen because things are trending in a different direction. But I did want to protect myself because I thought overnight we are probably looking at least a $2,000 move down based on where we were up here. And so it's mostly because I saw this um, wedge being formed right here. So I'm going to go ahead and draw this one. There's a wedge being formed here, the top side of it, and here's the bottom part of it. And like wedges can break either direction, right? It could have bounced off of this and even kept playing out, and even now it wouldn't be out of the wedge if that's the way that it had gone. But at the very least, for me, just looking at the chart action and everything else, or the price action and everything else on the chart, it did not look like this wedge, especially in these overnight hours last night. It did not look like this wedge was going to break up. If it's going to break while I was asleep, then it was going to break down. So I wanted to go ahead and put in a stop loss. I didn't want to put in a stop loss like right here because they could see that people have stop losses right here as this wedge forms. They take people's money and then they let it go back up to the top part of the wedge. So I set my stop loss down here, and you see where I ended up getting out of my position. Um, and I did it. There wasn't any really good places to do it based on, so I did it based on the bottom of this 4 hour close. We don't have enough price action up here to really be able to assign good levels, but I knew on the downside we were looking to at least run back all the way down to 30K, right? So obviously it went past that and went down here and tapped up this 28 down here. And if I were to zoom out on this chart and create levels, those will probably be the levels that I'll create. So if I, let's do a horizontal line, this would be one of those lines. And then we probably need a little zone here. So I'm gonna do two of them. What do I need? Not magnets, but stay in drawing. Um, so I'd probably have a zone that looked something like this. And you see it hit one of those, right? And any test into this would kind of count, and maybe even for areas like this, you might make this a zone. Um, Often you can just use lines to see where the areas are. So you see this was a point of resistance for a while. If it comes back down here, I would expect a bounce here. So last night, me and my little brother were talking about Ripple and Bitcoin and stuff. And oh, I'm sorry, I got out of the text. He basically said something about, okay, so I'll just take it back from this Ripple part. Sorry if you're a Ripple person, you're gonna uh, might be triggered by this. But he says, but the only reason I'm still in on this, he's talking about Ripple, is because I bought in so low, and if Ripple wins, it only has to go to $1 for me to 4x. Bitcoin would have to hit 130K for me to 4x. My instant response is Bitcoin will hit 130 before Ripple goes to $1 tuck because Bitcoin leads and Ripple is shit. But we don't need to get into the nuance on that, but that's why. One of their charts is going up, setting higher highs. One of their charts is going down, setting lower lows. Yeah, you want to buy low and sell high, but when something breaks the prior all-time high, you are probably buying low because it's going to continue to go find what its new high is. As you've seen since Bitcoin ripped through 20, it's gone up and tapped up 35, and I don't think it's done. So continuing the response, I basically say that um, you want to buy low and sell high, sure, but you don't want to buy things that are making lower lows. You want to buy things that continually break their all-time highs. That's what makes the stock market a good investment. On the monthly scale, Bitcoin is projecting between 100K and 400K on this run. Ripple is projecting at 2 cents or something like that. And I'm really just making a joke. Um, then it continues, and he says, uh, shouldn't Bitcoin retrace back to 25, or is it just going straight to the moon? Well, I'm not Miss Cleo. That's not how you trade. You look at the different levels and then you make plays based on those levels. So, Jariah, stop. So, he says, Jariah, stop growling. He says, sorry about that. He says, shouldn't Bitcoin retrace back to 24,000, or is it going straight to the moon? I said, if it retraces here, probably. But if it keeps going, the levels will be higher. Might not like if it keeps going here, then when it comes down, 24 is probably not on the table, though. It could be depending on how long that cycle takes. And I said, might not go that low because we are in FOMO season. So you play it level by level. If this is the local high, meaning that this is the local high, right? The not the high for the whole run. Because when I'm talking about 100 to 400,000, I'm talking about over the next, couple of months. Like the way this thing's moving might be this month, but I'm looking at a monthly scale when I'm talking about those predictions. I'm not talking about what's going to happen this week. This week it could go down to 20 before it heads back up, but might not go that low because we're in FOMO season. So you play it level by level. This is the local high. The next level I'd expect would be a bounce at 30K. But if this thing rips again, it's going straight to 38, 40, or 45 because we don't know where the tops are, because we've never had a prior top. And so in this situation, if you look at this chart based on what I said to my little brother last night, oops, let me get out of drawing mode. Based on what I said to my little brother last night, this play that I made here, you see that we had our bounce, depending on what time frame you're looking at, we had our bounce all the way down here at 28, or if we're looking at closes, we're looking at like 30,800 is where these 4-hour closes look like they're sitting. So if we look at the hourly chart, you'll see that it cascaded down, it broke through my level, had a nice old long wick. It looks like it had a first bounce right here, right? So it went down, it popped back up to close right here, and then right, this is on the 30K level, or I guess this is the 38.8 level that I was just looking at, and then it breaks down further, and here's 30,200. Let me see if I can. Yeah, so here's 30,200, 30,200, where these closes are, but it went much lower, and this reaction is so strong I think this is probably a temporary bottom. So if I would have done my morning routine right and I would have been looking at the charts by like 7 or 8 this morning, then I would have been able to buy down here at 28 because I definitely would have bought that. I would probably would have had a small buy at 30,000 that I would still be holding on to because I would have been holding on to it. I think all of this range is in play here. And I would expect that we have one run. Well, this might be the run. We might not get another one. We have this run, and this thing is going to bounce its way up to here, up to the top of where this wedge started, or maybe somewhere in here. I need to look at other time frames to see where I think those levels would be. But it's going to go up here to try to give another run to 35,000. Go away. Okay, so it's going to give another run up here to 35,000, and then it's going to decide, right? This is what we call price discovery. Bitcoin is trying to figure out what the price should be in this range before it goes the other direction. So now we have a nice freaking massive range. I'm about to say it's not a nice range. This is a terrifying range. So if Bitcoin just continues to play out in this range for a couple of weeks or a couple of days, the way this thing is moving, then even before it breaks out, there's 25. Let me move this. There's 25% trades on the table, right? So if I would have been properly trading last night, or maybe I just need to have something to tell me like, hey, you had a stop loss in last night that probably got triggered. You probably have a good buy. If I would have woke up and bought in here, then I probably would have cashed out somewhere. I would have cashed out. I would have sold approaching this wick here. So I probably would have sold very close to where I bought this first time. Um, Now I'm not in this trade, but I have gotten out. So not trying to brag, it's not a lot of money, and I traded it out from like $500, but um, you can actually see what, like right now, I'm basically half in, half out. If I sold all of my Bitcoin right now, I'd be at about, I mean, I'd take some fees, but I'd be at about 24 or 23 and some change, $100, right? So I got out when up here, I was basically maxed out. I've only done these sells, and you see this stop loss sell was my largest sell. In this range, I have sells at 31.5, 31.7, 33.7, and 33.6. And or I guess those are really both 33.6, and this is really one cell that just got broken in two different pieces. But I've basically bought, some of this built up. This was a smaller buy than some of these, but I'm basically buying down here in the 24 area. My last buy was at 28 to sell up here at about 32. Well, the reason I'm making this video, and so I'm gonna call this trading journal on this channel or whatever, but when I post this as a blog post on Playing Markets, the name of this is going to be something like buying all-time highs, because it's counterintuitive when you think buy low and sell high, but it's what you should be doing, right? Things that are making all-time highs are probably going to continue to make those all-time highs. So not only do we have this range here, right, that we can trade, and no telling how long it's going to go on trading in this range. But when it does, my signal to buy, because I missed this one, and maybe, right, I was considering making a small buy right here. I just don't want to play the trade because these are short term. Like, if I would have bought here, I would have been selling like 5 hours later. Each one of these is an hourly candle, so I would have been selling quickly. I don't tend to sell that quickly. If you look at these, right, these buys for 2,400 were 2 weeks ago, or 24,000 were 2 weeks ago, right? And even before that, you see that my trades generally have weeks in between them because I buy based on levels that get touched. Um, if I had more time to trade, if I had a bigger stack, for example, then I'd probably be more keen to play these moves. At a time like this, these moves are bigger than they usually are, so I should probably be playing them anyway. But there's this range here that you can play and see there's a trade here, there's a trade here where this thing may come up here and tap this, or it might be time for it to come down here and tap this 3,000 again, work out this range, and that could be another buy that this plays out. Now, this could be the end of this run, and this could be a lower low or a lower high right here. I mean, it kind of already is, that this thing goes and breaks the other way, and we go talk about that 25,000 that Tucker was talking about. I'd probably look at it at 24, but that is the way this could play. But if I get in, or if I don't, my next buy will probably be up here. So what I've essentially done is I've sold low because I sold out at 32,000, and then I will be buying high. I will be buying at 35,000. So like that seems like a loss. Now, it's not, because I've made my trade from 24,000 up to 32, and I'm making sure that I protect that money. That's the most important thing, that I don't let this thing go back down to 24,000 before I sell out of that position. Now, some of this, I'm never like, I don't let this account go below zero point 0.2 Bitcoin or 0.02 Bitcoin. So, and eventually that's going to jump up to 0.03. And really, I need to send this to my paper wallet so it's not even showing up here. So, really, right now, I only have like $1,800 eligible to trade, even though this account is worth like $2,300, because I'm not going to, like, some of this is for the long term. I'm not touching it because I don't want to sell out of it for this little move right here, and then I'm not paying attention to crypto for a week or two, and I look back at this thing and I'm buying at 45,000. So I don't have a problem buying at 45,000, but this point two was bought at like three. And so I just want to keep that three, or those buys at three, in my account, and move that into a long-term hodl position instead of trading that actively right here. Now, some piece of these trades from 24,000, if this thing goes up high enough, are going to immediately be added to hodl position as well, because that's a low buy that I don't think we'll ever return to, like 3K. We'll see how all that plays out. But the point that I'm trying to make to you is that buying the all-time high or just after it's exceeded the prior all-time high is not a bad thing. Let me see if I can clear this crap off of my chart. Sorry, I'm not a expert on all the quick commands on using this tool, but let's say we go to the daily view. And let me zoom out so this chart looks normal again. Now, at the all-time high, there was probably some good sells. If you bought down here, selling this all-time high, as you see, I have some sell orders here. Selling this was a good trade. Now, this could be a point that this market rejected. Let's say comes back down here off of this, doesn't have the momentum for it. Oh, wrong thing. And now it comes down here. What is going on? Gotta hold those. And oh, okay. Then it comes back up here and breaks. Bounces off that 20. That's not what happened. It just screamed through. But this was a good sell because maybe you were able to buy at 16 or maybe you were able to buy at 14 depending on how this played out. A lot of people would have thought that this is what it would have done. That would have come down here to 14. That was this prior top. I ain't feel like doing that. So for whatever reason, why won't these go away? For whatever reason, Bitcoin just wants to scream to the upside, probably because they're destroying our money and other macro things that are happening in the world. Lots of the big banks have already bought in. The people I trust, if you watch some on prior videos, say it's undervalued at 100,000 and 200,000 right now based on how many banks have bought in. So the move is coming. I mean, it was coming and now it's in, right? But if you would have bought right after this, right after it broke this high, so you say, okay, I don't really trust if it goes to 21. That could just be a fake out and then it reverses and comes back down for extra pain. So I'm going to buy at 22,000. Well, if you would have bought at 22,000, the all-time high, you'd be up 50% right now. I mean, depending on where you sold out. Technically, ugh, I will get good at using this chart thing eventually. But right now, at this second, you'd be up 42%, right? And if you sold at the top, which is hard to do, you'd have been at 60%. Depending on where this goes from now and how long you hold it, you may have a lot more upside to it. Now, this is like, I don't want to just show this, but especially because I'm sending this video to you, Tucker, and Henry right behind me is probably gonna watch this one too. I just want to put this on the table so that you understand what has happened historically in Bitcoin. I don't think it's a good idea to try to get rich quick off of anything. You want to get rich for sure, not quick, for sure. I mean, if you do it quick and for sure, sure, but sounds like you're robbing a bank. So I'm gonna let the best trader that I've seen talk about what has happened over the course of Bitcoin at times that it broke its prior all-time highs. At one time, the all-time high was 20 cents. What happened after it broke it? At one time, the high was $1. What happened after it broke it? One time, the high was 20 bucks. What happened after it broke it? $200. What happened after it broke it? 20,000. What happened after it broke it? And this is a little bit technical. He's using a Fibonacci retracement tool here. But keep in mind that all of these lines that he has on this chart, this is the prior all-time high. So he took this high and made a line. And you see that over some months, it took a while to get back to it. Once it broke through this line, it has a massive run up and then it hits another line where it comes back down. I mean, it didn't hit a line, it set the line. Once this was in place and we're at this candle, you could go ahead and say, all right, this is a solid area to be building some hypotheses off of, some trading hypotheses off of. And then it goes down and then it comes back to this high. What happens after it goes on that high? What type of percentage gain does it have? You see, it's fully exceeding the Fibonacci retracement tool. You eventually you'll understand what that means, but it's going further than the Fibonacci retracement, completely. So each of these is exceeding a Fibonacci retracement. Well, when you see, we're right here in this thing right now. So there's still room to run. But let me let Crown say it, and I'm sorry if he uses the word dildos to talk about candles, or he cusses, or he makes some joke about some shitcoin. But he's the best trader, so let's let the man speak.
Base is there and then puts in the last drive of that parabolic rally before the next major reversal. Accumulation zone to the breakout area. And every been done is if I've gone and put a fib extension on all these moves as well, starting from the accumulation zone to the breakout area. And every time, this is very interesting actually, every time it breaks out to the 4 spot 236 extension, and then it bases there and then puts in the last drive of that parabolic rally before the next major reversal. So for example, you have this one right here. This one actually doesn't register as much, but the other ones do. But it does close above here, technically speaking, and then boom, major move up. I'm actually curious about this would look like on a percentage move above the 4 spot 236. If there's any sort of rhyme or reason on this one, that's 120% move right there. This one's a lot more obvious, closes above the 4 spot 236, and then a nice melt up for the final drive. That's actually about 38% move, so not as interesting. This one over here, this one a lot less so as well. This one is an outlier. That's right. This one actually does look a little bit better than that. But major fucking move after that one as well. Perhaps I could make that a little bit lower and see if that increases it. Yeah, a little bit better there, but still not what I'm looking for. And then same thing over here, accumulation zone between about $2 and $20. So that's kind of gravy. It goes all the way to the 4 spot 236 right here, bases off that, and then boom, and there's your parabolic blow off. Above there, how much more percentage is that? About 250%, not bad. Same thing over here, goes to the 4 spot 236, bases right there for a second, and then blows off its top a couple weeks later after going another 150%. Then same thing over.
So just to be clear, these percentages that he's doing here, he's not measuring this full percentage. Like he's been doing this for a couple of weeks, so he's getting deeper into the analysis of these breakouts. But this would be the line of 20,000. And he's talking about it making it through the fib extension. And I'm sorry, at first I was saying retracement. This side will be the retracement. This is the extensions. It breaks through the full range of the Fibonacci extensions and then goes for these other percentages. So he said 40, he said 200, he said 120.
For here after the 2014-2015 reversal, and gets up to the 4 spot 236, bases off here. This is your last local low in the rally to $20,000 in 2017, and then major move up on this one. Actually, this one pretty damn impressive. Basically vertical 435% move to the upside, and then same thing. And well, I guess we're working on this one over here. Put into perspective, the 4 spot 236 extension is all the way at $70,700. So where's my slipper? Stay nice and warm. There we go.
So right now what he's saying is based on the same retracement, the same analysis that he just did on all of these. And like, you don't want to just trade fractals. Like, things don't always happen the same way. And that's, you saw these different percentages. But you saw where he's saying in this example right here, that once it comes up and breaks through here and you put a Fibonacci retracement on this full range, the Fibonacci extensions, sorry to be technical, but the Fibonacci extensions will be exceeded, and then there will be another parabolic blow off. Look at where these Fibonacci extensions are coming in. What he just said is like 76,000 or something like that. So even to get back to this range, which every time that Bitcoin has broken its all-time high, it exceeded this range, or exceeded the range set by this tool. And it's not even to the top of that range. And then the minimum it's had after this range was 40%. The last one was 435%. The top of this range is, what do you say, 76?
Spot 236 extension is all the way at $70,700. So
70,700.
So that's all the way at $70,700, and all those rallies from the all-time highs have gone above the 4 spot 236, and then above the 4 spot 236 is kind of like the crazy. It's already fucking crazy, but the extra crazy zone, if you will. And if we were to play around with numbers with that as well, I'm just curious with that show. I think that we saw around 200 to 300% on the on the more crazy side. That would put Bitcoin on a 2% move above $200,000. Jesus Christ, I should not even this. This is fucking ridiculous. 40% would be 315,000. Listen, I'm talking about these right now, mostly because I don't have things to talk about in the short-term time frames, because I don't think that they're relevant right now. Long-term, is that relevant? Probably yes. What is long-term? Years. It's not relevant today or tomorrow or the next day or this week or next week or the week after that or this month or even the next 6 months or anything like that. It's going to probably take time. Then again, I always say that, and then it fucking does it in the next few hours. So fair enough.
Okay, so like that last little part that he said, he doesn't really believe what he's saying. He's trying to be conservative because the way that this thing is running is don't want to pull back. And the fundamentals behind it are different. If you look at all of those other retracements, there's no major downside. You have a candle or two that's red that pulls back 20, 30%. You can get you a nice little discounted buy, but then it just shatters through that next level. And okay, maybe 35 sets in a local top, but I will say I'm also biased based on watching this full video and seeing all of the long-term and other analysis that Crown does. And, I don't just want to play his video for this whole video, but especially for you, Tucker, and, people on the squad, like, stop trading other shit. trade Bitcoin. The way that things work anyway is that Bitcoin leads, the other things follow. So I don't know if I'll do this. I need more money for it to be worth my time, I guess. But if you want to trade altcoins, you trade Bitcoin on the run up. Then when Bitcoin consolidates and has a range, not 25% range like the one we're in now between 28,000 and 35, but when it has a nice tighter range where it looks like it's going to sit in there for a couple of months, that's when you go mess with Litecoin and Ethereum and Chainlink. You don't mess with Ripple because that, I mean, it's lots of these you might not want to mess with. I mean, I say stick to Bitcoin because you can make some of those same percentages. But when Bitcoin gets boring, pump and dumps and other things start to happen in the other ones where some money can be made. I don't want to say that there's definitely plenty of people who make money trading altcoins, but until you're good at it, stick to one asset so that it's simple. And like Bitcoin is screaming to the upside over the next, I think this thing's going to be at 100,000 in like 3 months. And I mean, if not, it would be because it turned around here and then waited. I mean, actually, it could be like 6 months. I don't know. These candles are so crazy looking. But if this thing keeps doing what it's doing now for 6 months, it's going to be at like 400,000. I think that it's moving too quickly for it to take that many more months. But I do think it has at least 2 more months of at least January will be an up month, and then February could be where our all-time high is, or it could be our new all-time high is set in. Could be where that is before. I mean, this thing's going to 1 million or 2 or 10 because fundamentals of economy. But in the short term, and talking about getting rich for sure and not quick, I mean, it's time. It's time to learn how to trade Bitcoin and focus on Bitcoin and use it as one, not trying to have a portfolio of all these. I have a little bit of Ethereum, I have a little Litecoin. I don't trade those. They sit in my hodl position like the 0.02 Bitcoin that I need to send right now. But this video is going to be called something, or it's Trading Journal 10 or something, but the post is going to be about buying higher highs and why that is a good thing. If you did a chart like this for the S&P 500, what happened if you bought after it broke the all-time high after coronavirus? What happened if you bought after it broke the all-time high before that? Well, you're freaking probably gained like 70% or something like that, because that thing's been doing crazy run up. Not the 800% that Bitcoin's doing, but if you would have bought at the all-time high, you would have been a winner. When you buy things that are setting all-time lows, and sorry to just like rag on Ripple, but if you're buying things that are setting all-time lows, they're probably going to continue to set all-time lows. And you know what? Let's look at this on a chart with more history. Right, this thing is setting all-time lows versus Bitcoin. It's going to keep going this way. I mean, until it doesn't, right? I don't know when it's going to turn around, but I don't want to be the one who buys right here thinking it can't go any lower, and then it goes down to 400, right? I lost half my stack, right? And instead, there's something, and there's plenty of, like, you're better off trading stocks than trading Ripple. There's plenty of assets that are on an upward trajectory that are, you can't predict every little price. Don't try to be Miss Cleo. But they're going up. Buying into a bull market, when that's what's called when it's going up, a bear market is when it's going down. Buying into a bull market makes everybody look like a genius because you're buying a asset that is appreciating, and you don't have to have all your price levels right. You don't have to have, all of the everything perfect, especially if you're just dollar cost averaging into something that's going up. Now, I'm gonna shut up on this one. Tuck or anybody else who watches my BS, let me know if you have any questions on it. I'll answer in the comments below. Yeah, that's it. Peace.